All right, so I wanted to add this video to the course to illustrate to you guys when to not enter a zone and when you should properly enter the zones. So this first example I'm going to show you, I'm going to chart out these zones, some 1 hour zones, and I'm going to show you how you shouldn't trade these zones just because we are in a specific supply or demand zone. So right here, right off the bat, we're looking at a 1 hour chart. We have a solid rally base drop right here. So this constitutes as a valid 1 hour zone right here. Mark that, and we will change this to pink. And what I do is I change my transparency to 75 so you can see the candles behind it. So I'm gonna duplicate this, and I'm gonna drag this down to this supply zone, which we have right here. So we have a drop, base, drop. So this is also a valid 1 hour supply zone. Now notice this is a used zone. So price dropped, base dropped, and when price re-entered this drop, base, drop, we rejected and sold off following that in the overnight session. But now price looks like in the right before the open, we're coming back and we're going to test this zone. So I was looking to short this zone as the morning went on. So I'm going to zoom out of this. Now we're going to go to a smaller time frame chart because I like trading and taking my entries based off of a 5-minute or a 15-minute to play it safer. 5-minute is a little more riskier than a 15-minute, but I use a 5-minute and a 15-minute to find bearish confirmation. Now that's important. I only enter a supply zone if I get a bearish confirmation on a 5-minute or a 15-minute chart. And anything that constitutes as bearish confirmation is anything such as a lower high, possibly a doji, an upper wick, or even a chart pattern that formed in a supply zone, which shows the bears or the sellers or the supply is in control. And we could take that trade and put our stop loss at the high of that zone and put our take profit zone at the next demand zone that we have below. So if I was looking to enter on a 5-minute chart, price came into this 1 hour zone that we have here. I'll maximize this. So this is the same 1 hour chart. This is 8:30 in the morning. Price rallied pretty strongly into the zone. So even though price is inside the zone, I'm not looking to short yet because I have no bearish confirmation. I have no bearish signal yet. So we can keep going, and look what happens. Price rips right through the supply. So there's not one candle in this zone that told me that the bears are in control. This was a straight shot right through the supply zone. So this is an invalid trade, and we would not take this short even though we are in supply. We will only take our supply shorts once we get that bearish confirmation, and vice versa for a demand zone. We get in a demand zone once price comes down, re-enters that zone, and we get bullish confirmation, such as a higher low, such as a lower wick, such as a bullish chart pattern, possibly in that demand zone. So I would have not taken this short. You guys shouldn't blindly enter in a supply or demand zone just because price is in that zone. You have to wait for that confirmation, like I said. So if you guys would have waited for the next supply zone to hit, you guys would have seen that we did not reject this either on a 5-minute. We came up, we actually formed another demand zone. So we rallied, we based with this candle right here where my cursor is, and then we rallied again. So we did not have a clean rejection from this area. So this also would not be a good trade because even the next candle above that, we had another rally base rally. We had another demand zone down here. So this would not be a valid short at the supply zone because we never got that confirmation. We came up and we retested that supply zone. So this is also another key point is that old supply will become new demand if we use that supply as a support level. So we had this 1 hour supply down here. Price blew right past it. Did not sell off from the zone. Did not slow down, and it did not step in with sellers. Came up, and look what happened. We came back down and retested the zone. So when I see this, I can look to enter maybe in this candle right here, and put my stop loss now, even down here below this low for a really low risk type of trade because old supply becomes new demand once we're above it, and we test that level, and it proves to hold that level. So you could flip it into the reverse side if we do blow right past that zone because obviously in the supply zone before, when price blew right past it, the demand exceeded supply and the supply did not exceed the demand as you would expect because price is in a supply zone. So retests are key. Same thing with this one. We blew right past this supply zone. We formed, let me get my circle here. We formed one demand zone, remove this, formed two demand zones, right? Did not reject the supply, did not make a lower high, did not have any bearish chart pattern here. Came up, look what happens. We come back down, retested the supply zone. It acted as demand, and then we came up and made another rally to the upside. Not that good of a rally, obviously, because I'm not looking to go full size once supply becomes demand. It's just something to maybe scalp really fast or for a quick potential couple points to the upside. So this is when to not trade a supply zone or even a demand zone if you want to flip it. You have to wait for confirmation, and that confirmation is key. So I'm going to fast forward to when you should be trading these zones. Let's go to March 31st. This is an updated video to the course. I added this because I have a lot of questions in the chat room. When should I enter these zones? Where should I put my stop losses, etc., etc. So, actually, if you guys look over here, I'll illustrate this really fast. We had a nice demand zone which bounced. So I'm gonna remove this box, remove this box, remove this box. Right here, we had a nice 4-hour chart demand zone. So we had a drop, a base, a rally. This constitutes this red candle right here. You draw from the top of the body to the lower point of the wick, extend it over, and we trade once price re-enters that zone. So now we have a 4-hour chart and a 4-hour demand zone. So I'll go into a smaller time frame. Now, if it's a 4-hour or a daily chart, I'm not going to use a 5-minute chart. I'm not even going to use a 15-minute chart. If I really want strong confirmation, I'm going to wait for a 30-minute chart to set up. And as you guys can see, we opened Sunday night. This is the futures market. So we opened Sunday night in this demand zone, and we had a nice rally. We based out, and we rallied even some more. So this constitutes as a nice proper long play. And you could have took this long play to a decent amount to the upside. But anyway, here is a 2-hour supply zone that I want to show you when you should trade these zones. So we have a nice clean 2-hour zone. We have a rally. We have a base, and we look for that base and candle right here, followed by the drop. And we have a nice, try to zoom in here. We have a nice supply candle which formed here. So if you were to look on a 2-hour chart, you would not get a bearish confirmation really, because we came up, we have an upper wick and an upper wick. But by the time you would buy this supply zone or short this supply zone, price would have came all the way down. You would have lost a good portion of that move. So that's why I go into smaller time frames, because if you kept it at this time frame, look what happened to price. If you waited for a bearish candle, you would have bought it all the way down here. When if you went to a smaller time frame, such as a 15-minute or even a 5-minute, you would have seen a nice rejection from this point. So here's the same 2-hour supply zone. We came up, and look at this. Let's say we only know this so far. This constitutes as a proper supply zone. Price came up, we rejected the zone. We made lower highs, and price is not coming up and trying to attempt to move higher. We rejected the supply zone, right? So what you can do is you're going to get long somewhere in this area right here. It depends on your risk. And what I do is I put my stop loss above the supply zone if it's a tight, small zone, because that's when, if the price does come above that level, that's when I know I'm going to be wrong, and my risk is so tight that I'm comfortable leaving it right there. So if you guys waited, you took the short, maybe you didn't take profit down here and you waited to a formal demand zone, which probably was down here. Even if you waited and stuck to your plan, which you kept your stop loss above this level, price, yeah, it did come back up, but it never broke this high, and it never, especially, now this depends on your risk, like I said, because some people might have their stop loss above this high, and some people might have their stop loss, like me, above the supply zone. So even though we rallied up the second leg up, we never broke this high, number one. And number two, we never broke this other high of the top of the supply zone. And number three, look what happens. A bearish confirmation, a double top inside a supply zone. That should be double conviction. You have a double top, which obviously is a bearish chart pattern, inside a supply zone, which is another bearish indicator, I guess you could say. So we have two major indicators that are leading this to the short side. And this is somewhere maybe I would add to my position once we got this double top. Or yeah, I would probably add to my position here. Or if I held this, sold it here, I would look to maybe start a new position over here if we closed out our previous position. But then look what happens after this double top. We came down and price completely tanked, and we bounced, at this 5-minute demand zone, but it didn't really last that long because obviously it's a 5-minute demand zone, and the stronger zones form on larger time frames. So this is where you should have taken this trade. You should have taken it when we got this first rejection, number one. Or number two, you could increase your position size when we double topped here. So that's when you should enter. We had that clean bearish confirmation. Even on a 15-minute chart, you would have seen that. You would have had the supply zone. We have a top, another top, and a nice move down. Let me see if I can find another example of when you should trade. So this looks like supply right here. Let me go to a 1-hour chart. Okay, perfect. So we had a nice rally, base right here, drop, right? So now what we do is we wait for price to re-enter the supply zone. It constitutes as a supply zone because we had a rally, a base, and a drop. So let me click this, show name, do not show. And then we could draw our rectangle right here. Like I said, we make it pink. I go to more, I change the transparency to 75 so we can see behind the candle. So now what we do is go into a smaller time frame. You go into a 30-minute, you're not going to see a clear rejection, because if you were to take this large candle down, you're going to miss a big portion of this move. You're not going to have a lot of meat on the bone if you take short down here. Because we looked at a larger time frame, you're going to miss a huge portion of that move. If we stayed on that 1-hour chart, you wouldn't see no rejection other than price coming down here, right? But if we go to a 15-minute, we had a nice wick and we had a nice drop. Yeah, if you waited for this next candle to close, you would have missed a decent portion of the move. That's why I go into an even smaller time frame, such as a 5-minute. So if you went to a 5-minute, we have the same 1 hour zone. Price rallied strong into an area of supply where there are unfilled orders. We had a nice doji candle. Right there, that doji triggers my supply zone. It triggers my short entry. This is where I'm going to be entering short. Once we get this doji closed and the next candle opens and we start selling off a little bit, I'll hop in short right here. Direction to the left. Hop in short right here. Now this also, like I said, depends on your risk tolerance. You could put your stop loss above this doji candle, or you could put your stop loss at the top of the supply zone. And price came down the last half hour of trading and we absolutely tanked. Now we only caught this move is because we looked on a smaller time frame. If you looked on a larger one, you would have not seen that as clear as you would have. So that's exactly what I look for when I'm entering my zones. I look for bearish confirmation or bullish confirmation. Same thing goes with each zone. Supply, I'm looking for bearish. Demand, I'm obviously looking for bullish because I'm looking to enter calls in on a demand zone. So you have to wait for confirmation. Once you get that confirmation, then you can take a trade. Do not just hop in short or long position just because we're in a supply or demand zone, because sometimes they break right through. Sometimes they might not be clear zones. Sometimes we might even draw zones which don't constitute as proper supply or demand zones. So it's important for us to see a reaction from either buyers or sellers at these zones. You want to see what market participants are interested at these areas. You shouldn't be buying in a demand zone when it's selling off hard in there and there's no confirmation of the bulls stepping in. And you shouldn't be selling in a supply zone when the bulls are stepping in and demand is strong in that supply zone. So you have to wait for the market participants to react in that zone, and when they react, then you could take the trade. Some people might be interested in not buying or selling in a zone, so that's why you have to wait for the larger people, the smart money, and the people that are bringing the stock up or bringing the stock down. You have to wait to see if they're interested buying or selling in your respective supply or demand zone. So I hope that video helped. I'm going to try to post some more live examples in the next couple videos in the course.